Good morning, everyone. Welcome to Windsor Brokers live daily market outlook. Today is Wednesday, 22nd of August 2012. Another sunny day here in our base in Cyprus. I hope that you all have nice and sunny weather, at least nice weather in your trading accounts. That is very supportive and give us a good mood for further trading and most likely profitable trading. The consolidative mode is the main characteristic of the trading during the Asian session, following yesterday's strong movements on still seen as rumors of comments of European Central Bank for possible action in buying Italian and Spanish bonds, preventing basically the further growth, increasing price of the yields that would not be sustainable at a certain point. The rumor that came from Der Spiegel on Sunday was confirmed by Daily Telegraph yesterday, seeing a quite good base for a possible stronger action of European Central Bank, as it seems that time is running out for the European officials to act and prevent some more disastrous scenario, I would say. Of course, the summer holidays were delaying the any action with the as the August coming close to its end, and the September coming a month with a lot of important meetings that are due to come with the European Central Bank and the Federal Reserves due at the first 2 weeks of September. Most likely we are going to see some more action in the markets, and hope that proper steps will be taken out by Europeans, especially European Central Bank, in order to handle the crisis. And basically the first step is to prevent Greece leaving the monetary union. That would be quite a dangerous scenario, as this could be spark for a further negative impact, possible leaving of the other southern countries that are currently in problem. Spain is number one, Portugal and Italy, of course. Before this, we have some important meetings during this week, as French President is going to meet Angela Merkel tomorrow, and then the Greek Prime Minister Samaras will come to Berlin and talk to Angela Merkel. Greece is basically asking for some delay and additional 2 years of implementing the austerity plan, but of course they are desperate for their next tranche of 130 billion euros, as they are again running of cash, and basically this seems to be an endless story. As at the end of the month is coming, and the beginning of September, where some very important events are due to happen, will give us some more clues regarding the Federal Reserve's widely expected scenario is for the continuation of quantitative easing, so-called QE3, that in this case would become quite unpopular for the US dollar, as further printing money, of course, will push this greenback even to the lower levels, as it's currently weakening across the board, while of course opposite reaction that is not ruled out at this point, with no at the moment no further extension of quantitative easing would be of course positive and supportive for the US dollar. As said, yesterday's news that came out, and mainly rumors, sparked quite a strong rally, as single currency broke above some important levels. First was the short-term range top 123.80, 124 zone, and then a break above previous peaks, 6th and 7th of July, double top at 124.40, approaching our technical barrier, the psychological barrier at 125, as well as British pound that reached levels close to 58.00. Again, our upside the target, while dollar yen is still posing after hitting its fresh high at 79.65, with the corrective action extending down to 79.15. More details we will have on our technical part that will follow. Just a brief look on dollar Swiss, that is also that has also slid further after losing 95 and 94 97 and 96.50 supports. 96.24 was the low seen so far. 96.17, pardon, was the low seen so far on late yesterday trading, with the currently consolidative corrective action underway. The biggest winners were commodities as the crude oil October contract extended so far to 97.82, while gold is trading just off the resistance band top at 1640, both being well supported. And of course, more details we will see in our technical outlook that will come shortly. We're going to briefly take a look at today's calendar. Not much again to be seen, but nothing from Europe today. So basically, during the European session, the news and technicals are expected to be the main drivers of the instruments, with some corrective action, I would say, seen quite likely during the European session, as yesterday's strong rally requires some profit taking at this point. From Canada, we have, this is actually the first one for today, retail sales due at 12:30 GMT, and no big change expected. 0.2% is a slight decrease from May's 0.3%, with core retail sales also expected to drop by 0.1%, as today's consensus is 0.4% compared to 0.5% in May. U.S. existing home sales are due at 1400 GMT. July's release increase to 4.52 million units is forecasted for July's release, compared to 4.37 million units in the month of June. And crude oil inventories weekly release due at 14:30 GMT from US. 100,000 barrels decrease in the crude oil stocks is forecasted for today compared to last week's draw of 3.7 million barrels. And finally, the most important today's FOMC meeting minutes that is due at 1800 GMT, and most likely will show that U.S. economic recovery has still been in disappointing mode, but the monetary policy might not be capable of solving many current challenges. These were also the comments from Fed's official Lockhart. He's Atlanta's president, released yesterday. From calendar, that was all for today, and we are going now to move to the technical part to see the latest movements and expectations for the major currencies and commodities. Euro as top performer yesterday, as first 124.86 was the high seen in the late afternoon yesterday, and since then the pair is in the corrective consolidative mode, currently moving around the 124.50 zone. Important was yesterday's rally through 123.80 and 124 range top and round figure resistance that basically accelerated the gains through 124.40, another very significant. I would say this was the key short-term barrier, 124.41.67 August double top, extending gains so far to set 124.86. Overbought conditions on the 4-hour chart and already pointing lower on the hourly. See potential of some corrective action at this point as the pair breaks below the initial dynamic support at 124.52. That marks 20 days exponential moving average, and 124.41 we have the first Fibonacci level, 23.6. I would say ideal level to contain any further dip is seen around the 124.15, 124.00, where we have the 38.2% retracement of the latest up leg from 122.94 to 124.86, reinforced by 55 days exponential moving average currently at 124.10, as well as 124.00 as round figure resistance, and the previous tops at 123.80. Ideal reversal should be seen at or above 124 in order to keep the near-term bullish structure fully in play for extension towards our next target and psychological barrier at 125.00. Of course, this acts now as a quite strong barrier, and some delay in rally is seen on current corrective action. Near-term risk would be seen on loss of 124, 123.80. That would put near-term bulls on hold, and again refocus the downside levels with the critical support still standing at 123.00, loss of which will again refocus lower boundaries of the previous range at 122.40. 50 zone. As said, the near-term structure remains positive, but currently in the corrective mode, as our indicators are pointing towards the downside, and the 4-hour RSI now emerging out of the overbought territory, seeing potential for some stronger corrective action that will precede the fresh rally. Break above 125 to open way towards 125.20 and 125.50 that are seen as the next upside targets in case of lift above 125. So far, the positive structure that has been established on the lower time frames, as well as the hourly, as well as daily structure that sees the indicators breaking above their center lines, and the clearance of the trend line resistance that was at 123.25, with brief break above 61.8% retracement at 124.74, retracement of 132.82 down to 120.42, sees good potential for further extension higher. 125.66 along with the previously mentioned barriers is seen on 90 days moving average on the daily chart. And similar to euro, the British pound extended its gains after clearing important levels at 157. The first 200 days moving average at 157.13, then a series of tops with the range top at 157.66, 76 so far being cleared, as the pair dented 158.00, our next upside target 158.03 seen so far. This was also clearance of 50% retracement of the latest down move from 163 to 152.67, now opening a way and the potentials for further extension higher, basically to define the fresh direction of the British pound after being congested within 157.70 and 154 range for the past past 2 months, actually, from mid of June 2012, with the upside levels seen above 158.00 at 158.47. This is static resistance, 22nd of May 2012 peak, as well as 159.00 next strong barrier round figure resistance, and 61.8% Fibonacci retracement. Just to mention that positive structure now dominates, positive tone dominates on the daily chart, while hourly ones are now in descending mode after hitting overbought territory, currently consolidating within a narrow range of 157.65 and approximately 158.00, but descending studies on the hourly chart see potential for further easing as 20 days exponential moving average so far holds the downside. The next important levels are seen at 157.50 as 38.2%. Close to it is 55 days exponential moving average, along with the previous high at 157.43, and basically this is seen as a quite good support to contain the possible further and deeper reversal and keep the upside immediately in focus. Of course, the 157.76, that is the low of the overnight session, is seen as a near-term breakpoint, and this also marks the previous range tops, and so far contains the downside. Ideally, this should be contained at this point. However, possible further easing is seen as the reversal signal is seen also on the 4-hour chart. As mentioned, the 157.50, 157.40 zone now offers quite good support, and ideally dips should be contained here. I would say risk would be seen on loss of 157. That will bring the pair back to the previously established range and favor further sideways movement, and mark the first attempt above the range top as false. And dollar yen also in the near-term corrective mode, extending so far to 79.15. Recall we mentioned in our yesterday's live session, also in the written analysis, that 78.90 zone offers quite good and strong support, and basically reversal at this point should be ideal, as we have Fibonacci 38.2 and 50% retracement reinforced by 55 days moving average at this zone, and reversal at or above these levels would be ideal to resume the near-term rally of 78.15 that peaked so far at 79.65. Our 4-hour studies are in the still pointing lower and approaching their midlines. That could be seen as a risk of further reversal, while negative tone dominates now on the hourly chart, and sees potential of further reversal as immediate cap 79.30 seen on 20 days moving average and 79.33. So both moving averages are around 79.30 zone as initial dynamic barrier, ahead of more significant static one at 79.50, break of which would provide relief and refocus 79.65. On the downside, the loss of 79.0078.90 would see risk of deeper reversal and the risk of sidelining the short-term bulls in favor of deeper reversal, with the loss of 78.70 and the static support at 78.58 seen as a trigger to turn focus towards the downside range floors at 78.15 and 78.00. The daily structure is improving now as indicators are above their midlines, and price is currently struggling to hold recent gains above 200 days moving average. That is offering quite good support currently at 79.22. Basically any reversal above this zone 79.0015.20, as I said earlier, it would be ideal for further extension higher. On the upside, our immediate target is at 80.00 round figure resistance and 50% retracement of pardon, we are not at the correct chart, 80.00 and 80.09, the peak of 5th of July 2012. The Swissy is still at the back foot after losing important 97.00 and the 96.55 higher base and the double bottom. This was the low of the short-term corrective action of 99.70 that was reached on beginning of August 2012, with the corrective action being capped at 98 zone, close to 50% retracement, with the subsequent attempts higher, leaving lower tops, signaling a fresh extension lower. This was signaled in our past week's sessions with the trigger seen on loss of 97.00 and 96.55. So far the pair reached the 96.17 ahead of another important psychological support at 96.00. Corrective action seen on the oversold hourly conditions is currently underway, with the Fibonacci level to watch based on the latest down leg from 157.66 to from 97.66, I do apologize, to 96.17. Initial dynamic barrier has now been dented. 96.42, the 20 days exponential moving average. 96.52 comes 23.6% retracement, with the more significant 96.70-80 zone, where is the 38.2% retracement, and descending 55 days moving average, and this is offering quite good resistance. I would say only break above 97 would avert immediate downside risk and prevent pair from a further sliding, while ideally reversal at 96.70 and any level below 97 would be seen as a lower top and further extension lower, with the further retracement as set seeing below 96, seeing the 95.61 90 days moving average ahead of 95.00 as the round figure support seen as the next targets in the case of further extension lower, and this will be signal of stronger corrective action of the larger up move from 89.29 low of 24th of February 2012 that peaked at 99.70 on 24th of July 2012, with the some key points being lost, further extension lower as the daily studies are now firmly in the negative territory, keeping the downside favor in the short term. As said, the crude oil enjoyed its recent support from the news from Middle East unrest, crisis between Iran and the Western world, war in Syria, as well as technical problem with the North Sea's oil platforms, where due to the technical and maintenance period, the production is reduced now. So this is all being quite supportive for the crude oil, as it rallied to so far to 97.82. We're talking about October contract with brief break above 200 days moving average, as we mentioned, as initial strong barrier at 96.78, seen as a good base for further extension higher, and targeting our upside target at $100 per barrel. That is seen as next target, and a very strong psychological barrier. Current pullback is seen mainly on profit taking and technical points, as the price reached overbought territory, with the studies still in the negative mode, still pointing lower, and seeing potential for further corrective action that will precede the fresh rally. Initial support now is being under pressure. 96.55 zone reinforced the previous lows, and reinforced by 55 days exponential moving average, likely is going to be lost according to the current outlook on the hourly chart, with the 96 zone seen as next strong support, round figure support, and 38.2% retracement. Ideally, reversal of any deeper pullback should be seen at around 96 level, with the main near-term risk seen on loss of levels at 95.40.30, where is 50% retracement, and the spike low of 2 days ago at 95.31. On the upside, as said, sustained break and above 200 days moving average that is currently under pressure opens way towards $100 per barrel. As from the fundamental side and the news side, much more support is seen for the crude oil due to the previously mentioned mainly political reasons, rather than current weakening of the world economies that is threatening for a lower demand for the energies. And finally, we're going to take a look at gold. That was also the top performer yesterday. A strong rally that was sparked on the news from central bank pushed the investors more into the yellow metal. That increased again so far to 1641, just above our top of the recent range at 1640. As yesterday I also mentioned in our I think written comments about commodities, break above the bullish pennant and the range top now sees potential for a test of next important barrier 1645. 200 days moving average with the 55 days moving average now approaching 90 days. One attempting to cross above that will be additional support for the yellow metal, and break above 1645, 1645 200 days moving average will open next Fibonacci level 50% retracement at 1658, and this will be a good signal for a stronger recovery of the yellow metal with the 1671, 1679 seen as the next static barriers ahead of 1689. 61.8% retracement. Situation on daily chart is now improving as all indicators started to point higher. Of course, we might expect some hesitation at 200 days moving average as it's acting as quite tough resistance with the corrective action seen more likely on the quite extended hourly studies that already started to point lower with some corrective action in the near term not ruled out. The levels to watch immediate support is current consolidation range bottom at 1635. Then we have 1630 23.6% Fibonacci retracement and 55 days exponential moving average ahead of another significant support 1620 zone where it's 38.2% retracement reinforced by a near-term bull trend line drawn of 1590 low of 15th of August, and basically a reversal at around 1620, 1615, where it's 50% retracement would be seen as ideal in case of course, further reversal, further dips of current still consolidative action, while loss of 1600 level would be very bearish and turn the short-term focus towards the downside. That was all from me. Now it's your time to submit your questions. Please send me your questions and I'll be very glad to answer. If we miss any instrument or you want some additional information, I said I will be very glad to answer to you. Okay, again, we have the Aussie dollar, so we're going to take a quick look at the Aussie dollar. The hourly structure remains negative as the pair fails at 105.19 on the break above important 105 barrier. This happened yesterday, and subsequent further easing dipped so far to 104.32. This is the initial strong support, previous low of 20th of August, and currently is attempting to base at this point as studies are still pointing lower. Most likely the further reversal would be seen as the latest the latest upleg from 104.09 has been retraced approximately 70%, even 76.4%, I would say, around this zone, keeping the near-term outlook more into the negative territory and still seeing a potential for further easing towards important 104 zone. The 4-hour chart, the trend line support drawn of 101.75 through 104.09 is so far holding the downside as the upside break above descending trend line of 106.11 proved to be false so far, with loss of the trend line support seen as spark for a test of important 104 zone that will allow for a deeper deeper reversal and corrective action of 101.75 to 106.11 uplift, with the levels on the downside below 104. We have immediately below this 103.93, 50% retracement, and more significant 103.42, which is 61.8% retracement. Also more negative tone is seen on the 4-hour chart, while daily studies are pointing lower, and loss of momentum at this point might see risk of further easing and corrective action of the uplift from 190, broader uplift from 95.79 to 106.11. With again 104.00 and 103.38 in initial Fibonacci support, 23.6. It's important 102.91, where is the 200 days moving average. We have already one golden cross at 101.79, and the 55 days simple moving average now is approaching 200 days one. That would likely generate another one, and they will keep the bulls, medium-term bulls of 1st of June 2012 low at 95.79 in play, with the latest movement seen just as corrective, as long as 103 level, where is the 200 days moving average, holds the downside. Any further questions, please? Just to mention, we have started also the technical outlook for the commodities. You can find them, we will distribute them through the trading platform, but also for those that are not our clients, you can find them on fxstreet.com. That is our exclusive distributor. It's updated on a daily basis, and should be in approximately 1.5 hours, the fresh today's update. So in addition to the currency technical outlook for majors, now we offer also a technical outlook for commodities. Of course, if you have any interest in any other commodities that are listed in our trading platform, you can always require this either during the session, or send me an email, and I can provide you with a technical outlook for those that are listed, that are traded in the Windsor Brokers platform. If we don't have questions, then I would like to thank you all for being with us and attending our today's session. I can see quite a big number of attendees, especially today. Just a reminder for tomorrow's session, same time, 7:00 GMT, 10 o'clock local Cyprus time. We expect you again tomorrow morning. Until then, as always, have a nice day and very successful and profitable trading. Good luck.